All right, welcome back, guys. The reason why I still create videos like this, videos on account flipping, videos on account stacking, is to help as many of you guys that I know that are still struggling in this industry, people that are struggling to make money, or most especially traders that I know that have capital problem, because most people, one of the complaints they make is capital problem. And I've already told you guys multiple times in the past that if you are a good trader, capital is never a problem to you, because you can raise as little as your capital to as much as you can through account flipping or account stacking. But the only problem I see that most traders face is because they don't know how to do it the right way. So many traders struggle with account flipping, especially beginners traders, because they don't know the right way to do it. They don't know the rules. They don't know the guidelines that are involved in account flipping. And that is why this video is very important, because right now I'm already on the move, taking 100 US dollar to above 1000 US dollar. And in this video, I'll be telling you guys, I'll be teaching you guys everything that you need to succeed if you want to get involved in this type of trading. Because obviously, account flipping, account stacking is not for everyone. Only those that are ready for it, only those that are prepared for it, only those with the right knowledge, with the right information. I'll be telling you guys my trading rules that are involved in account flipping, account stacking, so that if you want to replicate this kind of result, you should know how to do it the right way. You see, one of the major problems that so many traders face when it comes to trades like this, like stacking of trade like this, is they just stack trade at the wrong time. For example, this is where I got in on the move, and you can see the reaction of the market at this point. And if you check my orders, my trade, you will see I executed all the trade at one particular price level, and then I left everything to run. I just left everything for the market to do whatever it wants to do. But if you observe what I did, you will see that I wasn't executing trade as the market is moving to the upside. For example, you can see obviously that my trade was just done on one particular price level. Let me show you guys from my broker account. You see, this is where I executed all the trade at this level, at this one price level. All these will be big numbers here: 38 USD, 40 USD. All these ones are the trade I've been holding since Friday last week. And currently I'm up above 347 US dollar. But the most important thing I want to show you guys right now is that this is where I executed everything. Everything was on a straight line here, horizontally. And today's trade, because obviously as the market is progressing, that is where you look for strategic point to engage the trade, and which is among the rules, the information I will be teaching you guys today, when to scale into your position. You don't just scale into your position anyhow in the market. So there are a lot of things I'll be teaching you guys in this video, because I'll be teaching you guys both the risk management that is associated with this kind of trading, and also I'll be teaching you guys how to manage it properly. So I am waiting, hoping for price to go above this level here, this high here, which is my first take profit, and then trade back into this level here. There's another block and fair value gap here, which is very good level for price to trade into. So everything I'm doing here, there's a reason for everything I'm doing here. The first thing I'll be teaching you guys in this video is the right way to stack account, the safe way to stack your account. Stacking account means multiple entries on that account. If you check what I showed you guys, all the trade was executed at this level. I wasn't chasing the move as the market was moving to the upside. Let's assume I was chasing the move when the market was moving to the upside. For example, after executing my first trade here, the market push up, I execute, and then keep executing. At this point, I will still have more orders here at this point, and then the market will start retracing very deeply, deeply. All of these orders that are here, let me use horizontal line to show you guys. All the orders that were here, probably all of them will be on a drawdown as the market is pushing to the downside. Every one of them will be on the drawdown. This is the mistake that so many traders face when it comes to account flipping or account stacking, because at this point, all the trade is already on the drawdown, and probably there are multiple trades to the upside. And as the market kept pushing to the downside at this level, there will be no more money for you guys to trade. And then at that point, you blow up your trading account. That is the first mistake so many traders make. I don't want you guys to repeat it. The first rule when it comes to account flipping, account stacking, is to know the right point to engage the market. And we are doing it in line with our risk management plan. Now, the risk management part of this style of trading is very, very important. If you check my orders that I executed, you will see I have about 4 to 5 or 6 orders. Initially, when I started the account flipping process, I have about 6 orders. Now, every of these 6 orders, each of them have stop loss. The stop loss position is exactly where I'll be risking 50% of my trading account. And there's a reason why I'm risking 50% of my trading account, because if you want to get involved in account flipping or account stacking, you must be ready for the risk management of it. And the risk management part of it is that you as a trader, you should be ready to accept the risk. For example, I was ready that if I lose $50 out of this $100, I'll be fine, I'll be okay. All I just need is to prepare for another day for account flipping. Now, not everyone will be able to risk what I just risked right now. That's why as a trader, you must know your level of risk and what you can accept in the market. There was a time where in this channel, I used to do account flipping with 10 US dollar account. Now I have outgrown that state of risking 10 US dollar account. Now I can comfortably risk 50 US dollar. I can comfortably risk 100 US dollar and nothing is going to happen and nothing's going to affect my psychology towards it. That is one part of trading you guys need to understand. If you want to get involved in account flipping or account stacking, you must be ready wholeheartedly to lose the particular money you want to risk, and then you cannot move forward to the next stage, which I'm going to show you guys. Now, after you have accepted the risk, the first thing you need to do is to execute your first trade. For example, those first early trade are executed, and you are executing all your trade at one price level. I'm going to show you guys how to know the time to execute your trade in this video. So you execute all your trade at one price level, and then put your stop loss at exactly the same amount you are willing to risk. These are the first preliminary stage, which is the most important when it comes to account flipping, account stacking as a trader. Now, the next important part you should understand when it comes to this style of trading is the strategy that you need to engage your trade, which is the technical analysis, because I just finished talking about the management part, which is very, very important. Now, it's not just enough to learn only the management part. You also need a strategy to read the market, to know when to engage, and also to know the direction of the market you want to engage. That is the next important thing I want to show you guys. You see, as a trader, first thing you will always do on any trading day, any trading week, whichever style of trader you are, is to know the direction of the market. Very, very important. I started this account flipping on Friday, which is this day, and then continued it today, which is Monday. And right now, after I'm done with this video, I'm going to move my trades to break even, and at the same time close some of my trade in profit so that I won't just end the day without closing any trade in profit. So I will take some profit, at least 100 USD, save it on my account, and then wait for today, which is Monday, to unfold his price action. Now, if you check this price action here on this daily time frame, it's easy to just know the direction of the market. If you have been following me right here on this YouTube channel, you will know how I frame the direction of the market, although I'm still going to show you. Okay, the most important thing when it comes to the strategy, when it comes to the technical analysis, is you know the direction of the market. Then after you are done with the direction of the market, the next thing is to understand when price action has already printed the low or high of the day. And after price have printed the high and low of the day, the next thing to do is to look for your entry opportunity in alignment with your direction of the market. This is just the basic rule when it comes to account flipping, account stacking. If you follow it this way, it will be very, very easy, very, very safe, because it's not a lifestyle for me. Almost every week, I will always flip account at least 100 USD or 50 USD, even though I don't record it, but I'm still trying to see how I can develop that habit of recording these videos and be uploading for you guys to learn. If you take a look at all these moves starting from late last month of March up to the first week of April, you will see that the market has been on the bearish direction. Bearish, bearish, bearish. So every trader that wants to trade this asset will be looking for selling opportunity. Until Wednesday last week, the market gave this strong willingness to go to the upside, meaning there's a change in direction in the market. That's the first thing I want to see. A fresh reversal in the market, which means high probability setup. So at this point, I'll be looking for the days that the market will print low of the day, because I'm already bullish, right? I will not be looking for high of the day because I'm not selling. So this day, I'm not interested because the market is not going to print low of the day during the London session. I'm going to go to lower time frame and show you guys. This day was the day I was interested. And at this point, the market have retraced for at least up to some percentage with my Fibonacci retracement. So if I pick my Fibonacci retracement, you see the market have retraced about 50%. But this Fibonacci retracement doesn't mean anything to me in terms of my trading strategy. So what I do, take off this Fibonacci retracement and then bring up this powerful machine here. This is the key zone moment. This is a tool that you can never afford to miss as a trader. So let's take a look at Thursday price action. Thursday price action, you can see price printed the high at this point and then traded to the downside. But New York session was unable to take off this high, which means price want to still do the New York continuation, and then the market push to the downside at this point. All right, so let's wait for Friday and see if we can find the low of the day during the London session. So after I saw this move, all I just need is price to trade to the downside. Look at what price just did here. Traded to the downside, rebalance at this other block here, rebalance at this other block here, and then started pushing to the upside gradually. I took some trade here, some others here, but I wasn't that comfortable because I know obviously this high meant a lot as a trader. I wanted price to just retrace like this, retrace like this, retrace like this, and then back to this key zone and then start firing up. I didn't want this profile hereby to trade up, form high of the day, and then came back. So that's why I stayed off during this whole process of coming to the downside. So at this point, I opened some orders on this account and then waited for price to develop. It formed a lot of consolidation during the New York session. And the reason why this whole consolidation came during the New York session is because price printed something like this, like high of the day. And you guys know from that strategy I created, if the market did something like this, there's high chances for New York session to keep selling to the downside. That's why when I saw all this reaction, I was just having the hope that, okay, let's see what the market will do after the New York season, because the New York season is going to cause a lot of drama, and it actually caused so many drama. And you can see after the key zone ended here, the move started gradually, 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 gradually. At this point, this is where my target is. Price to take out this buy side draw liquidity, and then price to come back to take out this high here that was created Wednesday last 2 weeks. You see, there are a lot of things, information involved when it comes to account flipping. The most important part is the management part, and which is accepting the risk you want to engage with. It is very important that you accept the risk in case the market is not moving in your direction. You won't be panicking unnecessarily to start flipping your direction, start going from one side of the market to the other, or start closing your trade abnormally. So it's very important you accept your risk. Then it's going to create that peace of mind. And when it comes to accepting your risk, try your best to always understand your capacity. Maybe at this stage, what you can accept or what you can offer is just 5 USD or 10 USD or 20 USD or probably 100 USD or probably 1000 USD. Just try your best to know that, okay, this is what I can give out to the market, and make sure you trade on the day of high probability setup. Like after a fresh reversal in the market, like what I just showed you guys, then there's high chances that you're going to make money in the market, because the market must move at least one candle above every reversal in the market. And I'm sure this video has helped a lot of you guys. If you're new here, make sure you subscribe, turn on the notification button on, so that you can be able to get all our latest updates on this YouTube channel. So I'll see you guys next upload. Peace.